So as we're preparing our business plans, there's 4 tools you can use. You can use all 4 of these if you would like, or 1 or 2. But if you use all 4 of them, you'll have a better understanding of your own business and how you're situated in your business environment. So the first one we're going to look at is the competition analysis. So just the way it sounds, it's looking at who else is offering the products and services that you're offering or trying to offer. And then the second one will be the strengths, weaknesses, opportunities, threats. And we'll talk a bit about market research. And then I'm going to walk you through the concept of a cash flow. Further in our series, there'll be more detailed analysis of how you do a cash flow. I'm just going to be giving you the concept so you understand what it is. All right, so this tool is about understanding who else is operating in your area, like who you're going to be competing with. So what you do is you put 4 columns together. You need to identify who your competitor is. So in this example, somebody wants to establish a restaurant. So what we had them do was a competition analysis. So in their community, they had to identify all the other people who were offering food services in their community. And then they also had, it's one thing to identify who else is offering food, but you need to go into a little bit more detail, like what are their strengths, what are their weaknesses, and how will you be different, and like how are you going to compete? So I'm going to walk you through this, this example, and then you'll have an understanding of what we're looking for and how it helps you. So in this community, there's a snack shack. The snack shack, it's well established. It's been around for more than 10 years, and it's located beside a school. And we all know children have, high school kids, they have a lot of disposable income and they like to eat junk food. So this is a strength for the snack shack. But at the same time, like all of us, we have strengths, we have weaknesses, so do businesses. So the snack shack has inconsistent hours, like they're not open every day. It's like maybe every second day. There's no dine-in seating. So when it's raining or snowing, like it's hard to go to that business. And there's always a high changeover of people working there. It's always a different person. Like they can't keep their employees. So see, you know so much already about the snack shack. We know what their strengths are and we know what their weaknesses are. So part of doing this exercise, you also need to know how are you going to be different from people who are already out there. So in this case, because the snack shack has inconsistent hours, well, we're going to maintain regular hours. How about that? We're going to open at 8 o'clock and we're probably going to close maybe at 8 o'clock at night. And then we're also going to offer delivery. We may charge for it, but at least something different from what the snack shack is. And then the other competitor in this community was a burger bus. So the strength of the burger bus, it had a really excellent cook or a chef. He makes things like jalapeno peanut butter burgers. Like he's like the kind of person you see in those food cook-off competition shows. He's really good at putting together recipes. So that's the strength. The weakness, though, he's only open in the summertime. So for the rest of the year, people are just waiting and waiting for him to open. So he's only open 10 weeks. That's his weakness. So how are we going to be different, or how are you going to be different? Well, instead of just being 10 weeks, maybe you can open year round. You really need to understand who else is offering the services you're trying to do or the products you're trying to sell. And because you need to figure out how you're going to be different, like how are you going to compete? And if you can't answer these questions, then you shouldn't even bother going into business because you're walking in blind. So sometimes when somebody has a business idea, we'll make them do this exercise. And they will. They'll go to their community and they'll count all the restaurants or all the gas stations, and they'll see who's doing this now, what's their strengths, what's their weaknesses, and how is my business going to be different. So this is how you do a competition analysis. It sounds very fancy, but there it is. You can see it on 4 columns, what we're looking for. To give you an idea, like let's say there's a community of 500 people and there's already 1 gas station. Well, how do we know if we open up a second gas station it would work, right? So you have to show us that there's a need for another gas station. And that's it's very simple. That's how you do a competition analysis. We say try to look for everybody in your community. And if you're in a drive-in community, look at 100 miles around you. Who else is offering this stuff 100 miles around you? The next tool you can use is a SWOT analysis. So in your business plan, you can just take a page and you give it these titles: strengths, weaknesses, opportunities, and threats. When a lender is looking at your business plan and they see these titles, they know you know the kind of business you're operating in and what you have control over and what you don't. So the strengths and weaknesses. So these are things that are in your power, they're under your roof, and you can control them. So in this example, strengths. So a strength of my business is the location. My business is located on the riverbank. That's where all the buses and tourists come by. And it looks beautiful at night with the sunset, and there's some fishing you can do off the dock. So the location of my business is a strength. I have control over that. I'm never going to lose that location. I'm going to keep paying my rent or keep paying my lease. So the location is a strength and I have control over it. The other strength I have in my business is staff. So I have a very key, friendly staff. They know most people's names. They're very friendly. They're energetic. They'll go the extra mile. So I know the staff I have is a strength for my business. I know that. If I'm a restaurant, maybe my recipes have been handed down from generation to generation, and those recipes are key to my restaurant. So those are things I have control over. So in your business plan, you don't have to put like 20 things that are strengths. Just focus on a few key things that your business is strong in. And then when you're looking at your strengths, you have to be balanced. You also have to show your weaknesses because you're going to have them. And it's better just to address them up front and plan how you're going to address them. So under weaknesses, like this is still in your house, under your roof, in your business, you have control over it. Theft. I know 1 or 2 people are stealing, or maybe it's customers who are coming in and I know they're stealing because I'm missing inventory and I can't account for it. So theft is happening. So that's a weakness. So how I can address that, maybe I'll get a surveillance camera, or maybe I'll hire a security person, or maybe I'll train my current staff how to look for, people trying to shoplift. So theft is a weakness. I can control it. So I have steps I can do to make sure that people don't keep stealing from me. Another common weakness is bookkeeping. Not everybody is keen on sitting down at the end of the day or the end of the week and entering journal entries and adding up all their expenses and sales and inputting into a computer or a ledger book. And that's okay. If you tell us up front that you're not going to be doing your bookkeeping, but you're going to hire somebody else and they're going to do the job in a good way, so you always know what's happening with your finances and your bookkeeping. So under weaknesses, theft is an issue and bookkeeping is an issue. Now, all of your own businesses, you're going to have different types of weaknesses. You need to know what they are and how you're going to address them. So if I'm a funder or lender and I'm looking at your business plan and you're telling me these things up front, I go, wow, this person has an idea of what they're facing and they have steps in place to address those risks. And that's good. A funder wants to know what you're good at and what you're weak at. Now, the ones on the bottom, the opportunities and threats, these are things that happen outside your house, outside of your business. You have no control over, and they're in your environment. You just need to know what they are, because running your business is not just in the business. Like, things outside of our business are going to impact how we run our business or try to run our business. So in your business plans, under these 2 headings, opportunities and threats, we want to see things like opportunities. Maybe in your community, there's a mine that's opening. So when a mine opens, usually there's more opportunities for people to get jobs or maybe start businesses because there's businesses associated with that mine opening. Or maybe there's a lot of baby boomers and there's certain services they need, like maybe they need more personal shoppers or more help around their homes or things to do with their health. Looking at these opportunities, sometimes maybe there's other business opportunities for you to access because of what's happening around you. And then threats. So these are things that are happening around you, you have no control over. An example would be the price of gas. Let's say you're a tourism outfitter and the price of gas is going up. Well, that's going to increase the cost of your boating. You know, when you take your people out on the boat for guided trips, it's going to increase the cost of the fuel for the aircraft that may be bringing in your guests. So these are things you have no control over. The price of gas going up, I can't control it. Another thing right now happening to all of us, COVID-19. Nobody has control over this, and it's happening to all of us, and it's affecting all of us in different ways. So this SWOT analysis is you can just do it on one page, give it the title, strengths, weaknesses, opportunities, threats, and put like 1 or 2 things under each one. And that's going to show the funder you really know what you're good at, what you're weak in, and what kind of environment your business is operating in. If you have questions while you're doing this with your own business plan, call us. We'll help you out and guide you in the right direction. Do I have any questions from anybody? Denise says it's 23 degrees where she is. I think it's a little bit warmer than that here in Timmins. And Alexa is telling Vince it's 17 right now. Okay. Okay, coming back to the third tool you can use when you're working on your business plan is market research. So just the way it sounds, it's like you're researching the market you're going to be operating in. The difference between primary and secondary research, how about this? If you know the difference, type it in, and we'll go from there. Does anybody want to take a guess what primary and secondary research is? No takers? Okay, so primary research is information that you have gathered yourself. It doesn't belong to anybody else because you went out there. You're the one who did the community survey. You're the one who sat outside and counted how many people walked into that corner store all week. You're the one who went in and visited the other competitors and you asked questions about the store. You did it. Everything that you gather and collect when you're doing your research, it's called primary. So in your business plan, you know, if you've gone through the effort of doing a survey or visiting competition, or even doing that competition analysis, you would put it under as primary research. And that's going to show us and you what you know about the business environment you want to go into. And that's, you know, every business plan should have a piece of that. The secondary part is information that already exists out there. For example, there's lots of information on Stats Canada. If you go on their website and depending what you're looking for, like you can go type in Cochrane and look for the average income of a family in Cochrane. And Stats Canada, like they'll give you what their averages are. And it's good to have this as a backup. Like an example would be through Stats Canada, they average that we spend, like we as households, we spend about 29% of our income on food. So if you look at your, I think it's 29 or 9%, I forget the number, but the idea is if you have a percentage too, and you can attach it to your secondary research, it shows like you've really done your homework. NAICS stands for North America Industry Classification System. This is where all sectors that operate, they have, they give them codes. If you want to know more information about this and how it can help you when you're gathering your secondary research, we'll walk you through it and how you use it. Magazines and the internet, this is other good sources of secondary research. But to summarize this part, when you're doing a business plan, you should have a little bit of information under primary information that you've gathered to make a case for your business plan and the money you're asking for. Do I have any questions on primary or secondary research from people? Okay. So the fourth tool is related to the financial piece of your business plan. We go heavily into looking at cash flows. So after I explain this to you, you're going to know what a cash flow is, how you do it. I'm just going to be showing you the concept of it, so you understand what we're talking about when we're asking you for a cash flow. And we have a small little exercise, which I'll walk you through. So cash flow is king. So cash is always flowing. That's why there's a picture of a faucet here. Money is flowing. Hopefully it's flowing into your bank account. So everybody on this webinar, you'll know how to do a cash flow once I'm done these next two slides. It's the things that we call the income statements and the balance sheets that are going to be more challenging to somebody who doesn't have a business background. And that's because in the accounting world, we follow generally accepted accounting principles, GAAP. So if you haven't taken courses or gone to school for this, you're going to have a hard time doing a balance sheet and the income statement. And that's okay. To start off with, what we want you to explain and understand to us is your cash flow. And then from there, once we have your cash flow stuff, then it's much easier to build the income statements and the balance sheets. So a cash flow starts with money coming in, all the dollars and cents coming into the business. We're going to see it. We want them identified. And then from there, we do this like on a monthly basis. And then every month, we know how much sales you're making, if you're getting any loans, if you've received any grants, or if you're putting your savings into the business, that's money coming in. And then for all the money coming in, there's also going to be money leaving the business. For all the money that's leaving your business in a month, these are things like inventory, if you're buying stuff, if you're paying wages, if you have to pay rent, if you have loans to pay and interest, like all the money coming out of your business. And then at the end of that month, what do you have left? That's the concept of a cash flow. Where you need to provide more detail is in the number of expenses you have. And if we look at this is an example of what it could look like. So if you have Excel, or if you don't, we could make you an Excel sheet and show you what we're looking for. But if you're trying to do this on your own, you would make a column for every month for a 1-year period. So the month you're starting with is the month that you're opening the business. So on the top is all the money coming in. So these are your sales. And then on the bottom is all the money leaving the business. So you're going to get like all your total cash expenses for the month. And then you're going to get a subtotal. I'll walk you through this one. So this person's starting a business in March. In March, they made $3,000 in sales. And they also got a loan of $10,000 to start the business. So for that month of March, that business is bringing in $13,000 cash. That's how much is coming in for the month of March. Now, to record and capture everything, we know $2,500 went to salaries. We paid $1,000 rent. We had a loan payment of $1,000. So all our total expenses totaled $4,500 for March. So if we subtract $4,500 from the $13,000 that we brought in, it leaves a total of $8,500. So we know at the end of March, that's how much cushion we have for our business. And then April comes along. So April, you'll see sales of $5,000. So the business opened in March, people are becoming more familiar with them, and maybe we're doing a lot of promotions. So our sales are almost doubling, right? So we made $5,000 in sales, but we're not getting any more loans. We're trying to make a go now of just the sales that we're bringing into the business. So for the month of April, we made $5,000 in revenue. And then to match it with the expenses for that month, they're pretty much the same what they were in March. $2,500 for salaries, $1,000 for rent, $1,000 for loan payments. So we take $5,000 sales minus $4,500, and that gives us $500 left. So not bad. So we add that $500 to the $8,500 we had from the previous month, which now gives us a cash cushion or a balance of $9,000. So we want to know what this is, because this is going to affect, like if we need to buy equipment for the business, or if we want to buy more inventory, like we need to know what our cash balance is at the end of each month, so we can budget properly for the next months. So as we go into May, our sales are not double; they're now 6,000. So that's good. So we're bringing 6,000 into the business, and then we capture the expenses. And you'll see the expenses are pretty much the same as they were in March, April, May, June. When you're doing this for your own business plans, you're going to have several more expenses in that category. And then if you're not sure if you're capturing everything, you can send us a draft of what you're working on, and we'll tell you what you're missing. Sometimes people forget things like their utilities, or hookup costs, or shipping costs. So we'll remind you of the expenses that are normal, and it's up to you to figure out like what you think that's going to be. So through this exercise, you know how much money you're bringing in every month. Depending what kind of business you're in, sales you bring in, they may go up and down throughout the different months. If you're selling stuff and you're in retail, maybe you'll see a boom go up in like November, December, because people are buying stuff for Christmas. Or if you're a seasonal business, you may not have any income in certain months, and that's okay. The part of the reason why you're doing a cash flow is you're looking to see what does your money look like. And then you're showing us, well, I'm a seasonal business, so I'm only going to be busy from May, June, July, August, maybe September. The rest of those months, I'm not going to be bringing any money, but because of that, maybe I'll just make interest-only payments with NADF. And it's through this exercise that we get to see where you're thinking your cash is. And with that, that's the concept of a cash flow. Further in this series, by another person of our staff, they'll be doing a more detailed cash flow analysis with you. Does anybody have any questions? No questions? I'm going to ask you guys a question and see if you can do a poll with me, okay? So I went over four, okay, wait. I'm testing you guys as I'm learning this, these tools. And I think we have a question. Denise. Okay, there we are. Okay. Is there anyone at NADF that we can contact when we have questions with QuickBooks questions? Okay, that's a good question. Currently, Denise, we have a business support officer and account managers who handle these type of questions. We currently do not have a designated person who can give you detailed answers on QuickBooks. If you were a client of ours and you wanted to learn how to do bookkeeping for your business, say if you had an existing loan with us, we could help you get training on how to do that. Does that answer your question? Okay. I was trying to send you guys a question. Okay. Okay. Let's look at loan payments. So when people come to NADF for a loan, we will work with them. We'll look at what they can afford on a monthly basis. Maybe it's a seasonal business. We'll go into interest-only payments, and we'll take a look at those. We want your business to work and not be such a financial drain on you that it doesn't work. So the person you're working with, they're going to see what your cash flow looks like. We'll look at different terms. We'll give you like a 4-year term versus a 6-year term, and we'll see what the difference is and see what's more manageable to you as a business owner. When we do give you a loan, there's nothing stopping our clients from paying the loan back sooner. So to summarize the financial statement piece, when you're doing a business plan, you'll hear that we're asking for a cash flow statement. So we've shown you how to do the basics of a cash flow statement, and we'll help you prepare like the headings of them if you need that. We also need income statements and balance sheets, but these things can come, we can pull them much easier once you have a detailed cash flow done on your end. So when you're writing your own business plan, these are the tips. Write your own business plan. Try to write your own business plan. You usually have more in your head about your business than anybody else does. So if you hire somebody, they're going to ask you a bunch of questions anyway on what your business idea is. You already know more about it in your head. So if you try to do a draft, like start writing some key points about what your business looks like, where it's operating, the strengths and maybe the weaknesses you think you're going to see, the competition analysis, like all of that builds your business case. And then on top of that, if you want, you can send it in to us and we'll give you help with your business plan outline, just to point you in the right direction as you're making good efforts to complete your own business plan. It's a good idea to highlight if you're creating any new jobs, highlight maybe the net income you think you're going to have in your first couple of years. It's good to also include on a monthly timeline of when you're going to spend the loan funds. For example, let's say if you have applied for a $200,000 loan, and you can say, well, I'm going to be ordering equipment and building up my store. I'm building a structure, so I have to order my equipment in March, and it'll be shipped in early June, and I'll have most of the loan funds spent by the end of July. So you're letting us know like what your timeline is with the money you're borrowing from. Have a backup plan to reduce risks. An example, if you're not interested in learning how to do your books, identify who's going to do it and what you're going to pay them. And then that way we know that part is covered. Maintain regular contact with NADF. We're all human. At NADF, we have four account managers, business development officers, going through all the applications we receive and doing assessments. So everybody's got quite a workload. We're all human, so call us. I know if I was starting a business and I was applying for a loan and a grant, I'd be calling like every second or third day to see what's up, where's my application. We encourage you to call us. We like to hear from you. Now this part, just checking my minutes. So we have the Aboriginal Business Financing Program. This is a grant program. NADF has been delivering this for over 20 years now. In summary, there's up to 3 categories that can be accessed as long as the totals do not exceed these maximums, $99,999 for an individual and $250,000 for community-owned operations. And they're all formula-based. If somebody needed more than $250,000 for their community operations, the application would be funneled up to INAC, or what they're called now, Indigenous Services Canada, because they have bigger amounts of money than we do. So if it's $250,000 or less for grants, we do it at NADF. But if you need more, we'll send it up higher to the government, and they'll do their assessment. So these are the funding guidelines. So we have business support, capital, and marketing. Business support includes things like business plans, bookkeeping training, anything you would need a professional to give you a quote on. Maybe it's a lawyer who's going to give you some legal advice. Maybe it's an architect who's going to give you some drawings. This category is called business support because it's support, and we can give grants. Well, you can apply for grants up to 75% of what you've been quoted at. So for example, if you go out and you get a business planning quote from a consulting person, and they say, okay, we're going to charge you $5,000 to complete this business plan. So you would bring that application, you would apply to the ABFP program with your business plan quote, and then we could potentially provide a grant up to 75% of that $5,000. And then you would have to pay 25% of that $5,000. So business support, we can do it like in the beginning when you're starting your business with business plans, and we can also give you more as you're learning how to do your own bookkeeping. Okay. The other category is the actual capital or startup. And this includes like if you're buying an existing business, any expansions you're doing to your current business, or a brand new startup. So depending on your age, we can provide you a grant up to 35% and 40% grant. If you're 35 years of age and under, you can get up to 40% in grant for eligible capital startup costs. If you're over that, then you can apply for a reduced amount of 35% grant of your eligible capital costs. And then we also have marketing. So marketing, just the way it sounds, is those strategies that are promoting and advertising your business. The more common ones we see are website costs, ads, social media, attending a series of trade shows. If you're doing business cards, like if you're doing pamphlets, if you have uniforms, or if you're getting logo designs, anything that you identify that's going to improve the net income of your business, that's what you could put under marketing. And we can cover those marketing costs up to 60%. So to summarize, there's three categories: business support, where you're going to get up to 75%, the startup and capital, anywhere from 35 to 40%, and then the marketing piece, we can give you up to 60%. When you're going through costs, and if you're wondering what's eligible and non-eligible, we're going to go through that with you so you have a fairly good understanding of what you can apply for. Sometimes an applicant, maybe all they want is just a capital startup. That's fine. Or maybe there's a business that's already been operating for a number of years, and really all they need is a little bit of a marketing injection. Then all they do is apply just for marketing. But some people or some applicants apply for all three, as long as they don't go over those maximums I spoke of earlier. So what you need to know, the Aboriginal Business Financing Program is needs-based, meaning you have to show financial need to get it. So we determine that when we look at your application, because we'll look at your net worth statement, maybe income tax returns, and your financial statements. You really have to show us you need the money. Like if you're well off and you have a large amount of money saved up, maybe you have like $2 or $3 million in the bank, chances are you probably won't get the grant. Like you have to show you need the money. ABFP will only help with the basics. I'll give you an example. Let's say if you're starting up a dentist practice or a lawyer's office, we'll help you get the equipment for what you need to do. We'll help you with like legal fees, as long as they're not over what you need to start. For example, like if you wanted to buy like $5,000 of like acrylic original one-of-a-kind paintings, no, we would say no to that. So when you're ready to fill out the application form we have, it's a good idea to speak to one of our account managers and we'll walk you through what's eligible and not eligible. You'll see here highlighted in yellow, I spoke of that the ABFP is formula-based. Here's a typical formula that we use. So 15% equity. Equity just means your cash. That's money you have saved up. That's what you're putting into the business. And then the grant would be 35%. And then the loan part would be 50%. So it's not like you can just get a grant with your little bit of your own money. You also have to get a loan piece to it. So you can see the three components equaling 100%. For example, like say if your business needed 100,000 to get started, you'd have to put in 15%, $15,000 as your investment into the business, and then you can apply for 35,000 as the grant piece, which you don't have to pay back, and then the other 50%, 50,000 would be a loan you'd be repaying back to NADF. So that's the summary of how that formula works if you're applying for ABFP for like a business startup, expansion, or an acquisition. I'll give you more examples as we go. So ABFP, like when you're applying, we'll be looking at your financial position to see if you really need it. Here are more examples of what we spoke of. So under business supports, say if you wanted to buy a business and you needed to get a business valuation to see what it's actually worth, or if you wanted training, and it doesn't have to be necessarily just for bookkeeping, any training that's going to help you improve the net income of your business. Those are things we'll consider eligible under business support. So the client would pay 25% of that, and the grant program would cover up to 75%. For capital and operating, these are your startups, expansions, acquisitions. Here's the formula: 15% from the individual, the grant would be 35%, the loan would be 50%. So there's three parts to that for the capital part. For the capital part, you must have a loan, whereas business support and marketing, you don't need a loan. Any questions? Denise saying, are there any grants open right now? Yes. So the grant program we have, it operates on a fiscal year beginning April 1st. So we're into our new year right now. So there's grants available till it's all committed. Here's the ABFP formula for our marketing. So if you put together a marketing wish list of your marketing strategy, you need quotes for everything you're wanting to get funded. So if you need business cards and you want to develop a new website, or you need some help with logo and branding, you go out and get a quote. Whatever your quotes come in at, put them together, add them up, and we can potentially give a grant up to 60% of those eligible marketing costs. But it's a good idea to call us and ask us what's eligible. So ABFP is provided in the form of a forgivable contribution. So that's government wording for grant. The forgivable contribution does not have to be repaid, provided the applicant follows the terms and conditions of the financing agreement. So when people get a grant, they're going to get a letter of offer from ABFP explaining the details of the grant. And really, there's not many. When you get a grant, there's a monitoring period anywhere from 2 to 5 years. And in that time, we ask that we get copies of your financial statements and maybe proof of your business insurance. That's it. Then once your monitoring period is done, that's it. You have no further obligations to NADF of the grant you received. Some common questions people ask about the grant program. Can I replace my old transport truck with a grant? No. We don't do asset replacement. It's not considered eligible, because when you're running a business, you should be planning and saving for upgrading and replacing your equipment as it wears and tears out. Can I partner with my wife who is Aboriginal? We get these scenarios where a husband and wife team come in and maybe one of them has a status card and the other one doesn't. The person applying to the business needs to be integral to the business. So, for example, a truck driving business, the person who's applying for the grant needs to have the AZ license. They need to be the one who's pulling that business together. So we ask these questions and we turn a lot of people away because we can see people trying to access a grant, but it's not really them who are integral to the business. Can I apply more than once? Grants are great. People love grants. Generally, a client applies once. The applicant is not meant to become dependent on the grant program. So if we've helped you out with your business once, you're going to have a hard time coming back for more, because it's like a one-time use, unless you're still not maxed those amounts I spoke of earlier, which is $99.99 for an individual and $250,000 for a community-based. NADF is also partnered with 3 other organizations. There's the Waganagan Community Futures and Moose Factory, Métis Voyageur, and Puidi Gujing and Kenora. So we partner with these organizations and we deliver the grant for their clients who are also operating in Northern Ontario. The grant budget is about 1.5 million for Northern Ontario, so it gets committed pretty quickly. This next part is going to go into business planning if you're applying for a grant. So when you're doing a business plan, you can do your own with our guidance. You can pay for your own business plan, or you can apply for a ABFP business planning grant. Like I said, we can cover up to 75%. So these are the steps. If you're planning to apply for a business plan with the option of the grant. So what you would need to do, you would have to get a quote, like a written quote, piece of paper saying from a qualified writer saying what they're going to charge for the business plan they're going to prepare for you. But before you can even go out and ask somebody to give you a quote, you need to have the information already outlined. We call it like a terms of reference. So the terms of reference is a listing of everything you want that consultant to write about in your business plan. If you need help developing one for your own business, we can help you because there's certain things that need to be in your business plan. So the person providing the quote will know how much work they're going to put into it by the amount of information you're looking for. So if you're coming for the ABFP grant, you also need to have some money saved up for the actual capital part of the business. What I mean by that, say if you're coming here and you need a business plan because you want to start let's say a gardening business. So if we're doing a business plan for a gardening business, we're going to ask, well, do you have the money saved up for the next part, the capital part of that gardening business? Because we don't want to pay for business plans if the person never had the money to actually start the second part, the actual startup of the business for what they're applying for the business plan for. If you're in a remote community, you can ask that the business plan writer include a trip to come and see your community, and that's part of, you can build that in as part of the cost. We do have a rule of thumb. If there's a business plan that's coming in $9,000 or more, we're going to ask that you get 2 more quotes. And that's just to show you people will charge different amounts for the same work. So it's a good idea to get additional quotes. And in the end, if you get a grant from us, the business plan has to be satisfactory. Like NADF has to be happy with it, and you as a client have to be happy with it before we pay the 75% of that business plan cost. So when you're applying for a grant, this is a listing of what can be considered eligible for grants. Capital costs. So capital costs is basically anything you can touch. Costs related to infrastructure development. For example, if you're in a remote community and you're trying to open up a store, maybe you don't have enough power, so you need Hydro One to put up another pole so you have more power. That's what we call infrastructure development. Cost of shares and assets. If you're buying an existing business, maybe you're just buying shares, or maybe you're just buying assets of that business. Under operating costs, we identify 3 to 6 months of operating costs for new startups. So operating costs are things like utilities, your rent or your lease payments. Those are what we consider operating costs, and insurance. So when you're doing your cash flow for the 12-month period, we're going to look at your cash flow and go in there and grab like 3 to 6 months worth of those operating costs, and we'll consider those eligible for your business startup. So you can see how this cash flow plays into how we decide what's eligible under funding. What's also eligible is costs associated with business innovation and growth, costs of engaging consultants and other qualified professionals. If you need architects, if you need lawyers, anything where you need a professional to help you, it would fit. Costs associated with providing financial and business services, and costs associated with obtaining appropriate training and mentoring. So yeah, under business support, where we can cover up to 75% of costs. So there's a whole, it's quite broad what's eligible. But what's more important to know is what's not eligible. So under the grant program, we cannot provide any assistance for direct alcohol production, marketing, distribution, or sales. We can't assist with tobacco production, marketing, distribution, or sales. We can't do any of those game of chance operations like bingo halls and casinos. We can't help with sexually exploited materials, entertainment, services, products, marketing, distribution, and sales, including any web-based activities. We cannot give grants for people who are trying to do a pawn shop, check cashers, finance companies, and others making small, short-term, high-interest rate loans that go by a variety of names. And we cannot give grants for passive investments such as real estate or any other activity where the applicant is not fully involved. So these are the no-nos for the grant. Another guideline under the grant program, it can't be a hobby business. It has to be a business you're running as your full-time operation. Because if you're not running it full-time, then to us it's a hobby business. If you're a seasonal business, we can make considerations for that. If you're a business owner already and you're trying to start up another business, you really have to demonstrate to us how you're going to manage both. We've had cases where people have resigned from their current positions to go full-time into the business that they're accessing the grant for. We do have cases where somebody is working full-time. For example, somebody's working in a mine, they're starting a gas station, and they're telling us, they're saying, in the first year, I'm probably going to keep my job just to make sure the cash is coming in. But my plan is to fully manage the gas station and resign from my other full-time position. Any questions? Denise, do you have any more questions? Melanie, how are you, Melanie? Do you have any questions? Okay, so here's an example of somebody who started up a bakery, Brian's Bakery. So this little bakery needed $28,000 to get up and start it. So the numbers you see here are what you would see in a grant letter of offer. It would clearly outline what you're applying the money for. So under capital and operating, that's one of our cost categories. This person needed a commercial oven and a fridge for $5,000. We looked at their cash flow and we picked up 3 months of their inventory. That totaled $1,000. They also needed shelving, a register, and a computer for $10,000. And we also look at 3 months of their lease and insurance costs totaling $4,000. So all that totals $20,000. And then another category they also access is marketing, because they also made some nice business cards. They had some signs put up. They got a website made for them, and they did a radio ads. So those totaled $5,000. And they also accessed business support. They got bookkeeping training for 4 months, and that cost $3,000. So it's not cheap to start up a business. So already we're looking at $28,000. So this $28,000 broken down into, this is how the financing worked. So for the first $20,000 under capital and operating, the client put in 10%. So they had to show us that they were putting in $2,000 into the business. And then the 40% grant is what they got because this person was 35 years and younger. So they were able to access 40% of that $20,000 as a grant. So $8,000 is a grant. And then the other $10,000, that's what they got as a loan through NADF. And then below that is the marketing side. So under marketing, there's a different formula for that. You don't need a loan for marketing. So the $5,000 cost for marketing items were covered by $3,000 or 60%. And then finally, under business support, this person got 4 months of bookkeeping training. The grant program picked up 75% of that, and they paid the other $750. So this is basically how this program works if you're accessing the grant. if you have any questions when you're going through this with your cash flow or trying to see what are eligible costs and how many months of operating we can look at, just call us and we'll walk you through it. Questions? So thank you for coming to the webinar. We have 2 locations. We recently moved to our new office in Fort William, and we have a satellite office in Timmins. Our number is 1-800-465-6821, or you can see us on our website. Our executive director is Brian Davey, and I am Kim. I'm the loans manager here. You know what I look like, you know my email, and you know how to get a hold of me. So we have a lot of information at NADF. If you feel like we can help you, give us a call. We'd be happy to hear from you.